Good morning, everybody. Hope you had a great weekend. I hope you were good to your mama, had a great Mother's Day, and now we are back to Monday. Yesterday was a pretty good week in the market. Today, we're not starting out quite so well. We'll have to look and see. We do have some important things coming up this week that Dave and I will talk about, kind of give the schedule coming up. Hey, if you're not sure how much risk you have in your portfolio, let me remind you, it's vitally important that if you're in that retirement danger zone, if you're 10 years out from retirement, or if you've been retired for less than 10 years, this applies to you. You need to know how much risk you have in your current portfolio because a major downturn could affect your income. Call us, schedule your no obligation financial x-ray, 863-382-0037. Again, that's 863-382-0037. 0037. Hey, Dave will be with us here just a moment. Looking forward to our conversation today.
5.7 Light FM. That's rock set there. Good morning. We're at 8:39 now. It's 21 before 9. Time to check in on Wall Street and see what kind of damage Wall Street's doing to your IRA and 401k this morning. And it's about a 50-50 shot whether it's going to be damage or help given on any given day these days. Phillip Statler from Statler Financial Services in downtown Sebring is open today, and he's in his office. Good morning, Phillip. How are you?
Hey, good morning, David. Doing well. I hope you had a great weekend. I hope all the mothers out there had a great weekend as we celebrated Mother's Day. You know, it's always a great time. It's a little bit different this year, right, because of COVID-19, but hopefully you had a blessed weekend.
I saw a whole pile of pictures up on Facebook of people celebrating Mother's Day at home, trying to keep their moms, who, you know, almost by definition are in higher risk categories, keeping them safe. And the family pictures were really kind of heartening over the weekend, I've got to admit.
Yeah, they were. It's kind of interesting to see the flow come through Facebook, and always nice to see some faces you don't see very often.
Absolutely. So we start out the day this morning on Wall Street after an up day on Friday. Dow was up 455 points, NASDAQ up 142, Standard & Poor's up 49. Sounds for all the world like a recovery, but we all know that we've got a row ahead of us to go. And anecdotal stories keep coming out after we've been feeling sorry for the oil industry for the last few weeks and their problem with the price of oil. One of the headlines that caught my eye this morning was that hospitals around the country are now getting ready to ask for bailout help because after all the weeks that we had without elective surgeries, a lot of them are flat on their back financially. Now, first of all, I start feeling sorry for the oil companies, which kind of makes me stand on my head and wonder which end is up. Now I'm actually feeling sorry for people that charge me $1,000 for an aspirin pill. What's wrong with the world these days, huh?
Well, you're right. It has been a long time since they've been able to do elective surgeries, and let's face it, elective surgeries are the major profit margins that the hospitals make their money on, and so it has been devastating for them. Now they are, at least I know here in Florida, we are seeing them start to open back up this week. I know there's finally picking up because they've had to put more procedures in place, right? You know, I think everybody's got to get a COVID test before you can have surgery. And so the lag time between the tests and getting the results, and there's still some kinks in the system, but at least they're finally getting some stuff going back forward.
Absolutely. I know our local hospitals are slated to begin elective surgery up again today. And as you say, though, there's going to be a few more protocols in advance of actually doing it. I keep seeing national news stories about the small town hospitals, you know, out in the middle of Nebraska that basically survive off of minor but elective surgery and then just keep a rudimentary emergency room to be able to service their citizens. They're in a real world of hurt because something folks don't necessarily realize, because emergency rooms basically help everybody that walks in the door. They don't have much of a choice. That's not exactly a high margin enterprise for a hospital. And if that's primarily what they've been treating for the last few weeks, there's a few of the smaller ones that run on a margin that retailers wouldn't envy that are getting into a world of hurt. Like I said, it's one of those fields that you don't think you normally need to feel sorry for, but we do all of a sudden.
Well, we do. I mean, you know, their profit margin is extremely high. The problem is they have a lot they have to write off, right? Because they have to take everybody, just like you said. So there is that issue. And in places like Nebraska, like you're talking about the Midwest, there's not that many COVID cases to begin with. And now you're closing down a whole hospital that has nobody in it because nobody has, COVID-19. And so I can see that would be problematic out in those Midwestern states where they just don't have that many cases.
Absolutely. My understanding is even the New York hospitals on the other end of the stick because they've been so doggone busy with emergency high-cost cases for COVID-19. They're losing their shirt because so many extra measures have to be taken there in the process. Even with the improved Medicare reimbursements for COVID-19 cases, it's a world of hurt for just about everybody in the healthcare industry. On a brighter side, Mondays have a tendency to be news item days and not much else because the government hasn't kicked in with data dump reports. Talk about people that you don't used to feeling sorry for. How about the people that charge you $20 for a bowl of popcorn? AMC Theaters are in difficulty, and now interesting news, Amazon has expressed an interest in buying AMC Theaters. I found that kind of intriguing.
That is interesting, Dave. I saw that headline also. And obviously there's not much detail to really mull through to figure out what the deal is and what's I know what AMC's thinking. They're thinking, hey, I can get rid of this thing and maybe make a little bit of money. And I'm trying to figure out what's Amazon thinking and what's their thought process in doing this. And obviously there's nothing here to give us any indication of the why behind this whole talk.
Absolutely. Well, Amazon has never been known to necessarily have a logical connection to their purchase. Remember Bezos buying the Washington Post just because it seemed like a fun deal. So you never know, but they generally have at least a halfway decent thought in the back of their mind that we can't always divine.
Well, that's true. They obviously make some money and they're doing okay even now. So but they can always put together that bad deal that gets them in trouble.
That's absolutely true. You had a couple of other tidbits of news items that came out as well, didn't you?
We do. We have some. We do have some earnings, but the other thing I have is Potbellies. Now we don't have one of those here, but I remember having one up in Tallahassee when I went to school, and they're a sandwich shop, right? They do sandwiches. They were supposed to report their earnings Friday, and they did not. They've said that they will not be able to make that cutoff. They will have to wait until the end of this quarter, closer to after June 22nd, just because they've closed down their headquarters because of COVID-19 and they've cut staff and everything else just to try to stay in business. So they're not able to report their earnings yet. So they've kind of pushed that down the road.
Got to assume we'll have a couple more of those as time goes on. Talking about reports we really don't look forward to seeing. You caught something I didn't. Neiman Marcus filed for Chapter 11 over the weekend, huh?
Yeah, they either filed or they were getting ready to file the first part of this week. I know I saw the headline was, it said they were filing. And so I didn't know if that meant that day or if they were going to file it on Monday or Tuesday. But yes, so looking at Neiman Marcus to file for bankruptcy, Chapter 11, to reorganize. Said some of their stores will not reopen. So we'll have to see how they can weather that storm.
Understood. The scuttlebutt as well is that folks expect JCPenney to put a similar filing in within the next 24 to 48 hours as well. So the price tag for the COVID-19 shutdowns is starting to go up rapidly, isn't it?
It is. And it's, you and I expected it, right? There's going to be places that cannot reopen, that will not reopen because of this whole deal.
Understood. We do have a few quarterly reports coming in as earnings season, well, I won't say might be winding down a little bit, but at the very least it gets into the meat of the season with some of the lesser-known companies out there.
Well, and some of them are well-known companies, Dave. We actually have like Marriott. Yeah, they actually made a profit, earned 26 cents a share, but that was way, way below what was expected. They're expected to earn 80 cents a share. So their revenue, though, topped estimates. I thought that was interesting. They are seeing a lot of improvement in the China area, in their hotels there, and the rest of the world is stabilizing. Now, it's stabilizing at a low level, but it's at least stabilizing, and that's giving them some hope of moving forward. They're still trading down today, but they have improved since I first started following it this morning. They're down 2.5% before we get going this morning.
That's not even enough to make my big loser list this morning.
No, but I bet this one is Under Armour.
Yeah.
We've been talking about Under Armour now for seems like for probably since you and I've been on the radio together. It seems like they keep popping up. Um, they lost a lot more than expected. They lost 34 cents a share this last quarter. They were only expected to lose 19 cents a share. So that was a big miss. Revenue was well below forecast. They saw overall sales falling about 23%. That's a big deal, obviously, because they've had to close stores. They are trading down this morning 10%.
I'm showing them right toward the top of my loser list this morning.
I figured it would show up right around there. I got two more, I think. I got Cardinal Health. They're the drug distributor. They beat on earnings by almost 20 cents a share. Revenue also beat the forecast, though they feel like they've had a good quarter this last quarter, but they feel like they're going to have some significant negative impact for the quarter we're in right now. So they are still should be a big winner today, Dave. They're still up 9.3%. People are liking what they've heard for them. So
they are toward the top of my winner list. I was honestly surprised to hear they're having difficulty with guidance in the quarter ahead. I would expect a drug supplier to do pretty doggone well in this environment.
The only thing I can think of, Dave, is that people are going to the doctor less because of COVID-19, and so I could envision that because of that, they could see their prescription rates dropping. That's the only thing I can really see there.
If I can see that, I canceled a couple of Gladys's elective doctor appointments during the shutdown just to keep her safe, and now we're kind of back in the saddle. So for 1 month, we were less of a customer than normal. I guess that makes sense.
Yeah. The last thing I have is AutoNation, the car retailer.
I
don't have some of the exact numbers, but I know they posted better than expected revenue. I'm assuming they may have taken a loss this quarter because they wrote off about $315 million of some non-cash impairment charges because of the pandemic. So that may have put them in a loss per share. I don't have that number anywhere floating around. But I found this interesting, that the last 10 days of April, they saw a pretty big uptick in sales. Now, I don't know if that was stimulus money coming in, tax refund money coming in, unemployment claims finally kicking in, but something allowed them to sell more cars that final 10 days of April. And they're trading up today about 7.4%.
That's good news, especially in the automotive industry.
Exactly.
Resetting the table for this morning. All the major indexes were up over 1.5% on Friday. You'd almost think our problems had been solved looking at Friday as a snapshot. Not necessarily so. 45 minutes before we open, Phillip, how bad is the red ink I'm looking at this morning?
It's pretty red, Dave, but let me just say this before I mention what they are. One of the articles I did look at, one of the headlines was that the bond market is indicating that we could still see a further decline in the stock market. And a more corrective action is kind of what the headline said. So, and that seems to be the case, at least today. We are down over 1%, pretty much across the board. We've got the Dow down 1.2%. That's $289. We've got the S&P 500 down a little over 1.2%. That's about $36. NASDAQ's not quite as bad. They're down about 0.9, $82. So everything's definitely red today after a great week last week on the exchanges altogether. If we flip and look at the commodities side of things, we see gold and silver both retreating again today, down less than 0.5% for both of them. And then crude oil is, it's down. It's up from where it closed on Friday. It is, one more. We're one tick away from being down from Friday, but we're at $24.77 a barrel right now, basically even from Friday. We were as high as about $25.50 this morning.
Yeah, I have it on delayed quote over 26 for a while, but it's moving all over creation on the crude oil market this morning. So I was giggling at you while you were stuttering there because mine's changing as fast as yours is, even though it's on a delayed quote basis. Something's going on there that's moving their markets. Overseas, the Asian Rim markets mostly all up at the early morning closing time this morning. Europe, for the most part, is trading downward, though, and considerably in some cases. Phillip, you mentioned it. We've been kind of preaching that we always test bottom a couple of times and have only done it once. Now you've got that researcher saying the bond market is confirming our instincts. Nice to have some stability in my retirement fund, and this is the time to look at how much risk I've got. How do I find you for that analysis?
Yeah, Dave, we haven't tested the bottom yet. That's the problem. So we are, heading that way. We don't know exactly what's going to happen yet. And nobody does. Nobody has a crystal ball, folks. But that's why it's important that you know where you are, that you have an understanding of what the risk is that you're taking. Give us a call at 863-382-0037. Let me really impress upon you to like our Facebook page at Statler Financial Services. We're getting ready to roll out some webinars and some things like that. And so if you're tied into our Facebook page, you'll know when those things are hitting. So like our page at Statler Financial Services, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk, 7:30 a.m.
All righty. Here almost every morning live on Light as well. Phillip, thank you so much. We'll catch you in a few, all right?
All right, man. You have a great day.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, everybody. I want to thank you for joining us today. You may have caught it kind of our conversation back and forth. I won't be here tomorrow. I have a Kiwanis board meeting to attend, so I'll miss tomorrow morning. But I hope that your day is off to a great start. Your week's off to a great start. And I look forward to speaking to you again on Wednesday. Have a great day, and I will talk to you then. Bye now.